It's time now for an in-depth look at the market news at this hour. And for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
So Bloomberg reports that the U.S. and China might reach a deal, a partial deal, on the condition that the U.S. doesn't impose new tariffs. The KOSPI is down today, but this appears to be welcome news to the markets elsewhere, is it not?
Yes, it is. But still, the market seems to be quite volatile in regards to the trade talks. If U.S. do not raise additional taxes, China is willing to make a small-scale deal with the U.S., but U.S. is not saying that they are willing to do a small-scale deal per se, and that caused some of the concerns before, and the market seems to be continue to be very volatile. But overall, Asian markets were taking this as a positive news. As you heard, Japan's been up about 0.45%, and Chinese equity market, after a long time of closing, it's reopened, and it's showing a very strong run. Today, Shanghai is up 0.8%, Shenzhen is up more than 1.4%, whereas the KOSPI seems to be taking a beating because of its option maturing day, and it's down 0.88%. Most important thing is that whether or not there can be a deal can be possible. We think that the view is that it can be done in some ways because both parties are suffering if they don't do any kind of deals at this point in time. And if given the elections coming in for the Trump at the end of next year, and Xi Jinping in a position where there's a lot of the political issues arising in regards to Shenzhen province as well as Hong Kong.
Yeah, and speaking of the protests in Hong Kong, now 4 months in, they're definitely affecting the Hong Kong economy and really have ripple effects elsewhere. What's the situation there, and how might it impact Korea?
Sure. If you look at the money outflow from Hong Kong to Singapore and other countries, it's actually quite largely happening. Total amount of about $4 billion have been moved out from Hong Kong. And Singapore's have shown that net increase in deposit jumped by 5% during the period of protest. And August alone is up 15% year on year, which is quite a significant jump. So far, there has been no regulations in regards to the money outflow, and that's a positive thing. But if there's any kind of the prohibition about money cannot be moved out, then that can be devastating for the structure of Hong Kong financial market. Hong Kong is always an environment of a deregulatory environment, and it has been one of the major places for the flows of the money to be deregulated in a sense. Now, you are seeing that some of the monies are moving out, but so far it's manageable. The Hong Kong Foreign Reserve is $432.8 billion US dollars. It's a significant amount. But the problem is that Hong Kong's total deposit is $1.736 trillion. So if there's a major outflow coming out from Hong Kong, that could be a very negative news. Now, in terms of the process itself, we think that it's going to be very gradual. We think that the money outflow from Hong Kong will probably move into Singapore, as well as Korea and Taiwan, who are showing much better probable system for the time being. So, being said, it is negative news for China and Hong Kong, but maybe it might be positive news for some other countries.
Got it. Well, in the meantime, the World Economic Forum has released its ranking of countries in the Global Competitiveness Index. South Korea has risen 3 years in a row. It's now number 13. What stands out to you in this report?
Well, quite interestingly, that Korea is actually competitive at global scale. A lot of people in Korea are thinking that Korea's competitiveness has been dying out and that economic growth rate is going to fall to the zero territories and whatnot. A lot of the negativities are flowing around in Korean actual market. But the reality shows that clearly that economic competitiveness is rising, 2 steps from 15th to 12th, 13th. And the corporate activities are doing well. But only concern that we are seeing, though, is that there's major 2 parts, which is largely pinpointed in the past, which is the labor market flexibility issues and also the corporate governance issues. the ownership risk of Korean corporations, it ranked at 88th. It fell from 77th, which is a sharp drop, and it is one of the worst number. As far as the flexibility of the labor market is less than 100th in terms of the ranking. So these are the main problems of Korea. We need to fix those things. Hopefully those things can be fixed. But in terms of the competitiveness of manufacturing sectors and various other competitiveness in other areas seems to be quite good.
Perhaps a sign of optimism on that front, at least. All right, Mr. Yu, that's where we'll have to leave it today. Thank you for coming on.
Thank you.